Everybody, welcome to the morning market briefing. It's Tuesday, September 6th, 2022. Hope you are doing well. Hope you had a good long weekend. Enjoyed all of that. Lots to chat about today. We're going to open up with a number of stories occurring in the energy space. We've got natural gas cuts in Europe. We've got OPEC Plus saying they're going to cut supply. We've got response from the U.S., concerns in Europe. Ben, take us on a tour of just all these moving pieces, because it seems like we've got a pretty coalesced and united theme of despite the pricing that we're seeing in everything from natural gas to oil, of people saying, good luck, it's gonna be harder.
Yeah, we were going to try to rally on Friday. It looked like the market was up pretty nicely, about 70 basis points, 0.7% midway through the day. And then we had the news out of Russia that be due to an oil leak. And there's an image of the oil leak, which is almost comical because it is a little bit of oil on just kind of these tiny wires. I mean, it's minuscule milliliters of oil we're talking about. It was probably spilled there on purpose. And because of that, they say that it's too dangerous to repair Nord Stream. And for that reason, they are cutting, they're not going to put any gas through the Nord Stream pipeline until further notice. This morning, we also had news, and I haven't seen it in a number of places yet, but the Yamal pipeline, which is smaller than Nord Stream, looks like that's done as well. So basically, Russia is using this as an excuse not to provide any more gas to Europe, and there is no real timeline for that to be resolved. They say this is a result of Western sanctions, and it's basically the West's fault. So that's where we are in terms of the natural gas
we have a
right
visitor.
You scared me.
Separately.
Nobody panic. We're just having our photos taken.
So that's on the natural gas side. On the oil side, OPEC met yesterday. They met to discuss what they're going to do with production. And they chose to reduce the amount of oil produced by 100,000 barrels per day, which essentially reverses the increase from last month. They did this as a result of what they see to be higher oil supply and lower supply demand imbalance, and therefore they're reducing oil. Separately this morning, they also said that they're going to give a lower oil price for Asia customers beginning in October. So this all begs the question, how do people respond? How does the US respond, and how does Europe respond? Tom was just in Europe. He has some things to say about France, and they're cutting electricity production and they're cutting electricity usage, and you can see that even in the hotels.
Yep. So I was in kind of all over the place, Paris, Lyon, and then a couple small towns in France over the weekend for a wedding of a buddy of mine, client of Narwhal, and resident French guy. And you'd be surprised how wild some of the energy cutting is. We were in a hotel in Saint-Chamond, which is a small town, and they just, at a certain point, just did not turn the lights on in the hotel. You could have lights on in your room, but if you were coming home, hypothetically late night from a pre-wedding soiree, you'd had to use your phone flashlight in order to get into your room, because it was pitch black. Like, you take the elevator up and you were just standing in the dark in the middle of a hotel, which is definitely a first for me. I've never seen that before. I have, spent time in Ireland where you can't turn the lights on in your own room unless your room key is in like a slot, which is pretty common. But I definitely had never seen, blackened hallways like that. And they had also turned off the air conditioner in that hotel as well. So it was, I woke up at like 1 o'clock in the morning and I thought I was going to have a panic attack. It was so stuffy in that room, and I couldn't figure out how to get the window open. It was, that was almost the end for your boy.
And what we're also seeing in Europe is we're seeing not only encouragement to cut production, electricity consumption, but also these massive bailout packages now. We have a $65 billion package proposed in Germany, which will increase payments to pensioners. It's not a whole lot, 300 euros one-time lump sum, and students one-time lump sum of 200 euros. Also increasing rent subsidies, increasing welfare payments, increasing child benefits, but by 18 euros. But they're also looking to rein in the price at which electricity prices are rising, and they're considering a relaxation of coal and nuclear rollouts, which they were going to basically shut down, but now they're going to keep those running. In the UK, they're looking at about a $200 billion package. It's about $150 billion for consumers and about $50 billion for businesses, basically absorbing all of the cuts, all of the rises in electricity costs, so that the UK is insulated a little bit. And the EU is going to meet on Friday, and the energy minister is going to meet, and they're going to talk about capping the price of gas used for electricity generation, temporary exclusion of power production from gas from the merit order, and they're looking to increase liquidity on the market, because what's happening right now is that your liquidity in the market in terms of your hedging, in terms of a lot of these utility companies that are buying gas futures in order to make sure that they know what their gas price is going to be. That market has been completely decimated because you're seeing 30% moves and all their hedges are getting blown out, which is really hurting them as well. So overall, this is causing a lot of pain in Europe. Basically, they're trying to solve this with more printed money from the government. The concern with all this is that it may only just help to spur inflation more, because if you subsidize gas consumption, essentially what you're doing is spurring demand when it should be reduced. So you almost have to create pain for your people, but they're not doing that. They're looking to bridge that pain, which I think could have negative second order effects.
Yeah, it's no different than really the rate situation here in the US. Hey, let's be slow to act. Oh, what do you know? This is something that's too messy to put back into the can.
Yeah, it's going to self-correct, but not how you think.
One thing too, I think worth noting, the 100,000 barrels of production that they're reversing from OPEC Plus. That was an increase that they rolled out last month. They're now reversing it, getting rid of that. Not a huge impact in terms of the scale, in terms of global consumption.
0.1%.
Yeah.
However, it is significant in terms of the implication of that. Remember, a month ago, we were talking about increasing production by close to potentially 1 million barrels a day. And now we've basically done nothing. And it looks like we're trying to send the signal that OPEC is trying to send the signal. Yeah, that production cuts are going to happen in the future.
Yep.
So I think that's the big takeaway there. And it comes at a concerning time, because the releases from the Strategic Petroleum Reserve will end at the end of September. So we're going to have 1 million barrels per day coming off the market from the US, because we're not going to be releasing that in the market.
Tom, also in Europe, we have an Ecb meeting Thursday. What are you looking for?
I mean, they're definitely going to be looking at tightening monetary policy. And to what extent, it's kind of tough to say. Right now, we're looking at 75 basis points. Seems to be sort of the bogey, which is a significant step up for the ECB. I mean, they were the slowest to act, the most making the most meager moves, but now I think they're on board, just like everyone else, where they've got to get rates up and they've got to do it quickly. It's going to be tough. Like Ben said, the liquidity crunch is real, not just in the energy markets, but in the fixed income markets. Last couple of days of last week, we saw some very serious moves all over the place, both here and in the EU, in terms of rates. So I think that this is the path we're on right now. I'm not really sure what is going to slow it at this point, because the entire world, really with the exception of Turkey and China, are being extremely aggressive and hawkish and tightening with their monetary policy. And so I think we're about to kind of go over the cliff in terms of the real pain. I think we were maybe early in calling it earlier this summer. The jobs market, as we've discussed ad nauseum, the ECB starts getting aggressive as well. That's going to have some real serious effects worldwide.
Staying in Europe, Liz Truss, the new British Prime Minister, in a story that, I don't know, I'm always impressed at the speed with which political situations unfold in other countries. And this was relatively quick, but new Prime Minister has been selected. Ben, what are you expecting kind of first orders of business, not necessarily taking over at a time of calm?
Yeah, the first thing is she's got to stem the tide in the economy. And I think she's going to do that by going to what the playbook is for every politician these days, every Keynesian politician, and that is spend money. And they're looking at $50 billion for British companies, basically subsidizing electricity prices for them. And then $100 billion for British households. Basically, they're capping the average annual household energy bill at the current level versus essentially having it double in October as would be scheduled. So that would be a price tag of about 130 billion pounds alone over the next 18 months. So about $200 billion in aid. And it looks like that's going to happen probably relatively quickly because you do have that shot clocked on it with prices potentially doubling in October.
Yep. Some random news on individual companies. Apple has their iPhone announcement coming tomorrow. Lots of talk about pricing, lots of talk about the advertising business. Anything else you're looking to hear, Ben, other than the best iPhone yet?
Yeah, I think it might be the best iPhone and maybe the most expensive iPhone yet. And I'm curious to see what happens with that. They may come out with another bundle. They're talking about being able to buy the iPhone as a potential subscription. I'm also hearing more about the Apple Car and kind of meaningful from potential suppliers. And I'm talking, not necessarily a manufacturer, but coding suppliers, et cetera. So I think that's something interesting to watch. I don't expect any announcement on that tomorrow, but I think that could be another leg for Apple as we move forward.
Bed Bath & Beyond remains in the headlines. Again, not a positive one here by any means. Their CFO, Gustavo Arnal, committed suicide Friday afternoon, jumped from the 18th story of his apartment. Took him a little while to identify who it was. So pretty, long, respectable career. Started at Avon, was CFO at Walgreens, spent some time at Procter & Gamble. Came under fire recently, even beyond just the performance of the stock price, but because he sold 55,000 shares of his company stock in mid-August in the middle of that short squeeze rally that we talked about. So now he's subject to a complaint alleging that he and other investors participated in a scheme to inflate the price and get out at a higher price. So just tough story all the way around. Obviously there is still very much a human element to the investing world and the business world. So just tough times there. Leaves behind a wife and 2 daughters, I believe. CVS is buying Signify Health. We've talked about that a little bit, thinking that it might go through. Ben, what's your view on this?
Yeah, so I thought Amazon was in the lead, but it looks like CVS ended up getting the deal in the end. $30.50, all cash. So Signify is that company that we talked about where we don't know exactly what they do, but they provide technology for healthcare services, especially healthcare in the home. And this basically completes the circle of care for CVS because they have Aetna, they have the Minute clinics, they have the pharmacy benefit management, and now they can actually have people go into the homes and provide home health services using the technology backbone that Signify has. So I'm surprised by the expected close, which is expected in the first half of 2023. That's relatively soon to get all the regulatory approvals, because I do think that could cause some concern, especially in the current administration with the regulators. But again, I think that it's probably makes sense for CVS. If Amazon were to purchase it, that would have been certainly more notable because you'd have a new entrant. But CVS continuing with its strategy to provide a whole suite of home health services.
Volkswagen also jockeying with its stake in Porsche, planning an IPO for later this month or early October. The valuation could be around $85 billion. They're going to additionally raise, through this some capital for their electric vehicle push. Ben, what's your view on this move? I mean, it seems like on one hand, from a financial engineering standpoint, it probably makes sense, but do you think there's a lot of appetite for this from investors?
I think it makes sense for Volkswagen because you get to raise cash for your electric vehicle investments. And I think it also makes sense for the Porsche family because they'll have a majority stake and they'll have more voice in the company, which they want at this present time. And it makes sense for the investment banks. Does it make sense for the shareholders of any of these entities? Is it the best time? Probably not. We'll see if the deal actually ends up going through. There may be a reason they're trying to push it out as soon as they are at the end of September here. But I think they just want this deal done, and they're just going to take whatever price they can get as long as the capital markets remain cooperative.
Good deal. We're going to wrap it up there. We will be back tomorrow. Other random news that we may follow up on, and lots coming through the pipeline. Right now, futures are up. So that's certainly good news, although a bit surprising. Dow futures up 60 basis points, S&P up about 60, NASDAQ up about 50. So we'll keep an eye on that throughout the day, and we'll talk to you guys tomorrow.